This tutorial is a project of nonprofitaccountingbasics.org, a free resource developed by the Greater Washington Society of CPAs Educational Foundation. Our goal is to encourage accuracy and accountability to help smaller nonprofits successfully manage and sustain their organizations.
Today's webinar is called The Financial Reporting Baseline, what board members should see and expect from their financial departments. I'm Eric Fraint, president and founder of Your Part-Time Controller. We do accounting and financial reporting for nonprofit organizations. And I'm going to discuss some of the things we see when organizations run into trouble. A very common scenario, organizations run into financial problems, and the board members say, "I did not know." And usually this awakening happens far too late, and they lose the ability to go back and fix what could have been fixed had they known sooner about the financial problems of their organizations. So the question always is fascinating to ask, why didn't they know what was going on? How could they not know what was going on? Well, in this webinar, we're going to talk about 7 simple we'll say procedures that if their organization was following, they would have known what was happening at their organization. So what are these 7 things? We've coined a phrase at our accounting firm called the financial reporting baseline. It was developed from our experience working with our clients and also with organizations that we're familiar with or we've researched over time. And these are some 7 common things that we've seen among these organizations that we're surprised to learn that they're running into financial problems. So we've summarized them into what we call the financial reporting baseline. So what are they? The first 3, number 1 of the first 3, is that these organizations which ran into problems and no one seemed to know about them, none of them were preparing a financial reporting package on a monthly basis, a financial reporting package. Now, a financial reporting package can include many different things depending upon the needs of the organization. But there's a few things that all organizations should be producing monthly. And those basics are a balance sheet, an income statement, and a cash flow statement. Those are the 3 basic financial reports. Other things are also can also be prepared and presented, but those are the basics. We find that organizations where the board didn't seem to know what was going on, all of them, almost all of them, fail to produce this basic financial reporting package. So that's the first element of the financial reporting baseline. The second element, timeliness. A monthly financial reporting package should be prepared on a timely basis. Now, for your organizations, you can decide what you consider to be timely. But certainly, if it's taking more than 4 weeks to produce a month-end financial reporting package, it's taking too long. For our clients, many of our clients, we strive to prepare them within 1 week, and for almost all of our clients, we have them done within 2 weeks. Some of our clients, for various reasons, might be fine with 3 weeks, but whatever your organization whatever your needs are, they should be prepared on a timely basis. If you are a member of a board and you're finding that it's taking your organization too long to prepare this basic monthly financial reporting package, you should be asking why. Why can't I receive this information more quickly? So timeliness is the second element of the baseline. All right, the third element of the baseline. Organizations fail to reconcile their bank and investment accounts on a monthly basis. For many nonprofits, your cash, and if you have money in investment accounts, these are major assets of the organizations. If these accounts are not being reconciled on a monthly basis, and by reconciled, a company is just like reconciling your personal bank account to your bank statement each month. Likewise, organizations need to reconcile to their bank statements each month. This has to be done monthly, it has to be done timely, and it has to be done before the month-end financial reports are prepared. If you are on the finance committee or a board of an organization, if you're not sure whether these are being prepared, you should ask and find out whether your financial department is in fact doing this. Likewise, if you are the financial person at an organization, this is something that you should be doing. You should be reconciling these monthly. All right, so these are the first 3 of our 7 elements: the reporting package, timeliness, reconciliation of bank and investment accounts. Well, let's take a look at the next group. We call this the Financial Reporting Baseline Plus, and here's what they consist of. The first one is reporting of restricted funds. In a nonprofit environment, I cannot stress strongly enough how important it is that you understand where you are with your restricted funds. Restricted funds might be temporarily restricted based upon time or purpose. They might be permanently restricted, for example, for an endowment. But if you look at your balance sheet and you look at the other information that's in your financial reporting package, if you can't tell where your organization stands with regard to its restricted funds, and when I say where it stands, I mean how much do you have? How much do you have left? Is it being spent in accordance with the restrictions that are imposed by the funders? If you can't tell, again, you've got a problem with the way the information is being presented to you. So that is a very key element, and something that, if I had to pick the single biggest problem that we see with nonprofit organizations, it's this failure to properly account for their restricted funds. All right, but that's not all. The second item: is your organization able to produce financial reports with varying degrees or varying levels of detail depending on the audience? You know, the board typically only needs to see summary financial information. The finance committee of the board usually needs to see more detail, but they don't necessarily need to see all the details of what's gone on that month. But then we have the executive director who reports to the finance committee and the board. The executive director, he or she, they typically need to see everything. Well, we refer to these sometimes as vertical presentations. If you think in terms of an organization chart, you have your executive director reporting to the finance committee and the board. And so the question is, can your financial department, is your accounting system properly set up to allow you to summarize information where needed and to show detail where needed? If you're not able to do this at your organization, chances are your accounting software, your chart of accounts, your systems, and so on, have not been set up to allow you to do this. So you should be able to report this way. Well, that's not the only way. When we talk about vertical presentations, number 3, we also talk about horizontal presentations. And what are we talking about horizontal presentations? Well, within an organization, you have various departments, you have programs, you've got cost centers, and the people who are responsible for these departments and programs and cost centers, they also need to see information, but typically they only need to see information for their particular area, the areas that they're responsible for. So we call these horizontal presentations only because if you think about it, how an organization might be sliced up, you might slice up an organization in different programs or different departments. However you like to think about it, the question is your accounting system able to produce information each month for various departments, programs, and cost centers? If not, again, probably, well, I shouldn't say probably, most likely, you don't have your chart of accounts or your systems and procedures set up properly to allow this to happen. If you're a board member, you should be asking, how come we can't get that information? So the fourth part of the baseline plus, and 7th in total, is is your organization able to forecast and budget on a cash and an accrual basis? You know, most nonprofits, once you get past a certain size, we're all on the accrual basis. And when we prepare our financial reports. Our financial reports are on the accrual basis. But if you only prepare your budgets and your forecasts on an accrual basis, you might lose the ability to understand what your cash flow is. The trick is to do both. And there's a technique for doing both at the same time without adding a lot of additional work. The technique for preparing a budget or a forecast on both a cash and an accrual basis is beyond the scope of this webinar. But this is a key requirement of your organization, assuming your organization's on the accrual basis. Discussion of cash versus accrual is also beyond the scope of this webinar, but come back to this website. There are already or will be soon information about cash, explaining the differences between cash and accrual. All right, so we've talked about the 7 elements of the financial reporting baseline. Now, some of you who are with smaller organizations might be thinking that, well, all this is fine for a large organization that's got a large accounting department and has accountants and financial people and controllers and so on. But I'm with a small nonprofit. We have a small budget. We only have a 1-person accounting department, and that person might be part-time as well. How do we do that? Well, I'm going to tell you that size does not matter. Whether you were in a large organization with many people or a small organization with a single part-time bookkeeper, if you've got your systems and software set up properly, you should be able to do all of the things that we've discussed. And if you can't do all of the things that we've discussed, then your organization has a problem. That problem needs to be addressed. And whether you are the accountant responsible for doing this, or whether you are on the board responsible for overseeing the fiscal affairs of your organization, it's incumbent upon you to make sure that at the very minimum, your organization is able to do these 7 things. Well, if you're getting now all this information, and if a problem comes up, and by the way, the fact that your organization is now able to do these 7 things doesn't present problems from happening, but at least you'll know about them. You'll have the information at your disposal to see what's happening, and you'll no longer be able to say, I did not know what was going on. So of course there's more to this. The financial reporting baseline is not the end of the story. It's only the starting point of what your financial department should be doing, and there are many other reports and analyses and things that an accounting department needs to do over the course of a month and a quarter and a year. But this is, again, something that we consider in our practice with our nonprofit clients. We consider this to be essential. So for help with this or any accounting issue, feel free to contact me. I'm Eric Fraint, president and founder of Your Part-Time Controller. Be happy to talk to you. Thank you very much.